Welcome back to Ticker Shock. I'm your host, Dave, and today we're diving deep into a stock that's been making some serious waves. Could buy now, pay later finally be paying off in a big way for investors? Or is the market getting ahead of itself with this high-flying fintech? We're talking Affirm Holdings, ticker AFRM, and their latest earnings report that sent the stock soaring. All right, let's get straight to the shockwaves. Affirm Holdings, AFRM, just dropped its fiscal fourth quarter 2025 earnings, and folks, it was a stunner. The company didn't just meet analyst expectations, they blew past them, reporting $876 million in revenue against a consensus of $834 million, a whopping 33% increase year over year. Even more impressively, Affirm returned to GAAP net income profitability, turning a $49 million loss into a nearly $99 million profit. Their gross merchandise volume, or GMV, rocketed to $10.4 billion, up 43%, largely fueled by their biggest merchant partners, the surging popularity of 0% APR installment loans, and their direct-to-consumer Affirm Card business, which saw its GMV more than double. And to top it all off, management issued optimistic guidance for both the first quarter and the full fiscal year 2026, generally above or in line with analyst consensus. The market loved it, with Affirm's stock rallying nearly 11% on Friday. So, who is Affirm? They operate a digital and mobile-first platform for commerce across the United States and Canada. Think of them as the modern layaway, but way cooler. They offer point-of-sale payment solutions, merchant services, and a consumer app, allowing you to pay for purchases over time, from 1 to 48 months. As of June 2021, they had about 29,000 merchants across various industries, from sporting goods to travel and electronics. Their revenue has been on a strong upward trajectory, hitting $2.32 billion in fiscal year 2024, a fantastic 46% jump from the previous year. Most of that comes from their merchant network, bringing in over $674 million, which is about 82% of their total revenue. The virtual card network makes up the rest, generating over $151 million. Geographically, almost all their revenue, $2.23 billion, comes from the United States, with Canada contributing around $97 million. While they're still forecasting a negative EPS for FY25, analysts project a return to solid profitability by FY26, with EPS hitting 55 cents, climbing to $3.90 by FY29. Now, let's get to the juicy part, how this news translates to Affirm's bottom line. That strong beat on Q4 revenue and their optimistic guidance directly impacts how we should think about their upcoming earnings per share. We need to crunch some numbers. For the current quarter, the analyst consensus is for an EPS of 8 cents. But given Affirm's strong momentum and management's upbeat tone, we're anticipating them to perform at the higher end or even slightly exceed their own revenue guidance. Affirm guided for Q1 FY26 revenue between $855 million and $885 million. The midpoint of that range is $870 million. We're estimating a modest but impactful 1.5% beat over that midpoint. Now, here's the key part: operating leverage. As a tech company with a growing platform, Affirm has significant fixed costs. This means that for every 1% change in revenue, their operating earnings can change by a much larger percentage. We're using an operating leverage multiplier of 2.0, so a 1% revenue change typically leads to a 2% change in operating earnings. So, that estimated 1.5% revenue beat multiplied by our 2.0 operating leverage gives us a 3.0% boost to earnings. Applied to the baseline Q1 EPS of 0.08 cents, that's a positive impact of about 0.0024. This brings our new estimated EPS for Q1 FY26 to $0.824. We see a 60% probability for this moderate impact scenario. Of course, there's always a no-impact scenario where they simply meet expectations and a high-impact scenario where an even stronger beat could push EPS up by nearly half a cent. And how has the market reacted since the news broke on August 28th? Well, you can see right here on the chart. Affirm's stock rallied nearly 11% instantly. This tells us that a substantial portion of this fantastic news has already been priced into the stock. Investors were quick to jump on the positive momentum. So, what's the final verdict from the ticker shock desk? This is unequivocally good news for Affirm. The company's strong Q4 performance, return to GAAP profitability, and optimistic guidance signal a robust underlying business. Key growth drivers like the Affirm card and 0% APR loans are clearly gaining traction, validating their strategy. My take? Given the significant rally we've already seen, for existing shareholders, this is a solid hold. But for new money, if you see any dips, I'd consider it a buy. Affirm is executing well. Their path to sustainable profitability in the coming years looks clearer than ever, and their operating leverage means future revenue beats could still provide a nice boost. They're making BNPL profitable. That's all for this episode of Ticker Shock. If you found this insightful, make sure to hit that like button, subscribe to the channel, and ring the notification bell so you don't miss our next deep dive. Remember, this is for educational purposes only and not financial advice. Always do your own research before making investment decisions. I'm Dave, and I'll see you next time.